Abhishek Steel Ltd has 1 lakh equity shares which are selling at rupees 100 each. Its capitalization rate is 14%. The company is expecting 65 lakh income for the current year and is planning to pay a dividend amounting to 4 lakhs. Okay, so wants to invest in a new project that will cost 75 lakhs. It is assumed that the model on dividend policy is applicable. Compute the price per share at the end of the period and the number of shares to be issued. Okay, so we've got two options when we are giving a dividend of 4 lakhs or when we're not giving any dividend. Okay, so when we are doing the calculation, our first step, step one is to calculate okay, the price per share at the end of the current year. Okay, so we are calculating what is called P1, and we will use the formula P0 is equal to P1 plus D1 upon 1 plus KE. Okay, now we have got two scenarios. One situation is when dividend is paid. The second situation is when dividend is not paid. Okay, so in the case of dividend being paid, alright, we need to calculate what is this D1. Okay, 4 lakhs is not good enough. Okay, 4 lakhs, you need to keep in mind when we are saying D1 is dividend per share, which is going to be equal to your total dividend, total dividend upon number of shares. And remember, the formula for number of shares is equal to equity share capital upon face value. And they are saying that we have 1 lakh equity shares of 100 each. That means we have already been given number of shares by default. Number of shares is 1 lakh. Okay, and that makes life easy because now we have 4 lakhs upon 1 lakh, which gives us 4. And now we can continue. All right, we have the value for D1. Okay, we have the capitalization rate, which is KE. All right, we have, okay, they're saying it is selling. Okay, it is selling at 100 each. So what we have over here is the P0. Okay, and now we're in a position to get P1. So we have 100 on the left hand side. P1 we do not know. In the first case, when dividend is given, the dividend is 4 upon 1 plus KE. Okay, and the KE that we have is 14%. And I'm just going to write 14% as it is. And I'm going to go ahead and do this here as well. 100 is equal to P1 plus 0 because dividend is not paid. That means DPS is 0 upon 1 plus 14%. Okay, and now taking this further down, okay, I'm going to just do them side by side. Okay, so it becomes easier for you all to understand. 100 plus 100 is equal to P1 plus 4 upon 1 plus 14%. Now remember, 14% means 14 upon 100. Okay, 14% is equal to 14 upon 100, which is equal to 0.14. Right, remember this calculation. Now we have 1 plus 0.14, therefore 1.14. Okay, similarly over here it is 100 is equal to P1 upon 1.14. And now this is division because that side becomes multiplication. So we get 114. 114 is equal to P1 plus 4. And therefore P1 is equal to 114 minus 4. P1 is equal to 110. Over here, 100. Okay, so you have got 1.14 division goes that side, it becomes multiplication. So we've got P1 is equal to 114. Okay, so these are our two values for P1 following both the situations. Okay, and what did they want? They wanted price per share at the end of the current year and the number of shares to be issued for financing. Now the number of shares to be issued for financing is our next calculation. Okay, and it's fairly simple. We have maybe you can take particulars and amount. Okay, particulars and amount. Okay, and what ends up happening is you have to keep in mind how much is being earned. All right, so they've said that the company is expecting a 65 lakh income for the current year. So if you're making an income of 65 lakhs, okay, so the income is 65 lakhs income. Okay, we could have actually combined the tables and had two amount columns next time. Income is 65 lakhs. From that, we subtract the dividend. Okay, the dividend in this case, again, we've seen it upstairs. They're saying they're going to pay a 4 lakh dividend, 0 dividend. Okay, so we have 4 lakh dividend. Okay, and over here, less dividend, which is 0. So what we have left is funds available for investment. Okay, funds, I really should have combined them, available for investment. Okay, and we end up with 61 lakhs and 65 lakhs. So this is what we have. But how much are these guys wanting to invest? They are saying that they want to invest 75 lakhs. Okay, so we have total investment 75 lakhs in both the places. Okay, total investment we have 75 lakhs, and now the difference between the two, 75 minus 61 will give you 14 lakhs. Okay, and that is your balance funds required. Alright, so we got ourselves 14 lakhs over here. Okay, and again balance funds required, okay, real waste of time. Balance funds required 10 lakhs, while less because we did not give dividend, so we have that much money anyway. So now our next step is to calculate the number of shares. Okay, so step 1 we've calculated P1. Again, this literally is part of answer 1. Step 2, they only want the number of shares to be issued for financing the investment, nothing else, no valuation, nothing. Okay, so step 2, okay, part of answer 2. So step 2 actually begins over here where we'll apply the formula, but the working note actually began here for part 2. Anyway, we have step 2 where we okay, or maybe you can call this step 3, and you can call this entire table that we have done on both the sides as step 2. Anyway, going forward, we need to calculate number of shares. Okay, I call it number of shares, NOS, but for let's just say number of shares is equal to funds required upon price. But which price? Price at the end, or what we call P1. So again, I'm dividing it into two parts. Okay, so when dividend is paid and when dividend is not paid. And again, we go ahead and do the math, and our formula for number of shares with substitution is equal to 14 lakhs. Okay, upon 14 lakhs, and how much was our price under dividend being paid? 110. Okay, so we have got 14 lakhs upon 110. And similarly over here, the number of shares is equal to 10 lakhs, is equal to 10 lakhs divided by, and going back upstairs, we have 114. Okay, and yes, if only they were the other way around, maybe we would have got some smooth answers. Life is not easy. Number of shares in the first situation is going to be 14 lakhs upon, is going to be 14 lakhs, 14 lakhs upon 110. Okay, so we are talking about 12727.27 fractional shares. It's allowed abroad. 12727.27 shares. Okay, and now for the other one, we have 10 lakhs upon 114, which gives us 8771. Okay, and it makes me wonder whether I put 10 lakhs in properly. Okay, we have 10 lakhs upon 114, 8771. Okay, 8771.92, and since this is 5 more than 5, I'm going to make it 93. So number of shares is equal to 8771.93 shares. Okay, with this we're done with the question. Please post your doubts downstairs. Please like and share. All right, thank you.